So now as we head into the overnight session and tomorrow, the bearish time frame alignment can remain in effect as long as we're holding below today's pre-market and initial resistance zone. If we take a look at the ES daily chart here, you can see that we have now put in a larger time frame multi-day balance breakdown. So as long as we are holding below this area, which is essentially today's pre-market and initial resistance, that bearish time frame alignment can remain in effect, it can remain in play, and the market may now have to head lower into the 5300s to find the next set of responsive buyers or bargain hunters, right? Because now that the bears have clearly won out, any longs that step in are by definition going to be counter trend and counter bias. If you haven't already done so, I would watch the recap video for, I think it was the 31st. I believe that's when we talked about the bigger idea that this may be a false breakdown, right? It may be a false breakdown. That was the bigger idea we discussed, I believe, at the end of the recap from March 31st. Or alternatively, this might simply be a pullback continuation that was setting up, in which case it would affect the bigger picture bias, right? So that is what has happened now. Initially, it seemed to be like, oh, this might be a false breakdown, but remember, we never took out any significant bias confirming zone. Yesterday was when the market tried taking out the bias confirming zone and it completely fell flat on its face, and then we broke down, of course, today. So right now, the bigger idea that seems to be in play is that we now have put in a pullback continuation, bearish time frame alignment has been confirmed, and now even the bigger picture bias is being challenged. Up until now, the intermediate time frame bias was bearish. The short term, even over the last few days, had remained neutral bearish, but the bigger picture was bullish. Well, I think now the market is challenging that bigger picture bullish bias. So as we go into tomorrow, as long as there's not any, news-based bounce or something or unusual price action in the overnight session, which I'm not anticipating, our bigger picture bias will likely now switch from bullish to neutral bullish, and we could end up heading even lower. Now, the market's made a significant move in a very short period of time, and we know the S&P in particular is a very rotational market. You saw that even today, that, the bigger pattern is clearly bearish, and yet we still end up getting an intraday bounce off of a high volume node, and then eventually we end up going lower. But intraday, on the smaller time frame, there are still bounces. That's just the ebb and flow of how the markets behave and move. And a lot of it is also because you have short covering, you have profit taking along the way, and that profit taking alone can result in a bounce, even if eventually the market's going to go lower. So understand that the market doesn't have to crash or sell off in a straight line. There can still be this ebb and flow as the market heads lower. But until we get some sort of structural change, and by that I mean a breakout above today's pre-market and initial resistance zone, so until we get some sort of structural damage to the upside, our bias will continue to be bearish. And if the market is truly weak, then in the overnight session, ideally we hold below the roughly the 54, 55 to 60, 65 area, right? So ideally we hold below this area. That would tell us the market's still in a very weakened state. And if we bounce into the broken initial support, I'd like to see sellers stepping in there, because that was today's intraday bias confirming zone. So now, as we head into overnight, I'd like to see that holding as key resistance. So in the overnight, if we hold below the 54, 55 to 60, 62 area, that's fantastic. That tells us market's still weak. and we can continue heading lower into the support zones below. And on the downside, the next bias confirming zone is at 5407 to 5412. We got very close to that area today, and so far in the overnight, we just opened a few minutes ago, we're seeing a little bit of a bounce here. Again, not a big deal. Until we get a structural break, we should maintain the bearish hypothesis, and the market could eventually now end up going even lower. A break below 5407 to 12 would serve as yet another intraday bearish confirmation, and then the next bias confirming zone is down at 53.6575 to 76. So if ES holds below the broken initial support, and again, ideally below 54.55 to 62, then the market could end up selling off tomorrow into 53.6575 to 76, and then the next strong support that we have, let me just pull that up here. Okay, so the next strong support zone that we have is down at 52.8375 to 95.75 and 52.7075 to 79.75. So the next larger time frame or strong support, you could say, is 52.70.75 to 52.95.75. That's where you could see bigger picture buyers starting to step back in. Because even if the bigger picture bias is bullish, the market usually has to get closer to bigger picture support to attract those bigger picture buyers. So if this bearishness remains in play, then eventually even those lower zones could come into play. Now, even though we're talking about zones that are pretty far away, understand that it's a bigger idea. It can take more time for that idea to play out. And tomorrow, it's a Friday. We have the employment number out tomorrow morning. That's a potential catalyst that could shake things up a little bit. And then because we're heading into the weekend, I think that there is going to be less appetite for new shorts to jump into the market at these very low prices. So tomorrow we might just get limited downward continuation and then followed by balancing and consolidation, simply because new shorts may not want to enter the market at those lower prices. But it doesn't mean that we have to necessarily put in a big reversal. I know on Twitter, on various social media, I was seeing all this talk about like a dead cat bounce and some sort of big rally. Unless we see proof of that happening, I'm not buying into that. Unless we are seeing clear evidence of larger time frame buyers stepping in, it's best to assume the bearish bias is still in play. And again, we've made a very large move in a very short period of time. So, given that the market's quite oversold, can there be a short-term, reactionary bounce? Sure, but I'm not anticipating that bounce to completely erase the sell-off that we saw today. Even if we do get a reactionary bounce, I'd like to see the broken initial support zone holding. You can see that even a move into the broken initial support would be a 50% retracement from the session high to session low for today, right? So even that would be a pretty impressive bounce in and of itself. Ideally, we want to see it holding below the HVN and the broken support at 54.62 to 72. And because it's a high vol environment, we are going to have to be much more dynamic. Remember that when the market's running on significantly above average volume, it's like the market is doing what used to take 2 or 3 days in a single session. So it requires more flexibility. It requires you to be much more vigilant and much more aware of new patterns that can develop intraday, simply because what we did today or since yesterday, typically it would take the market several days to make this kind of move. So when you make such a big move in such a short period of time on such high volume, that requires even more attention and skill to navigate. So I'll try my best to keep you guys on the right side of the market. And that's it from me. Let me see if there are any questions, and then we will wrap up.